All right, good morning. I know there's going to be an exciting panel coming up next. Jim just gave us a pep talk, so you're all going to have a lot of fun. I thought I'd give a little bit of introduction on myself. My name is Charles Cascarella. I'm the CEO and co-founder of Paxos, which is a blockchain infrastructure company. We issue stablecoins, and we also provide infrastructure for generally large institutions, but also small ones. And I do have one or two similarities to the prior speaker in that I spent my career as an analyst covering financial institutions, and I can say I read some call reports in my day, and they are definitely illuminating, though not always entertaining. Best when they're not entertaining, actually. And I've been able to look at small institutions and large institutions, and I think this is going to be a really interesting talk around how community banks are both important to the economy, but also how innovation can enable them to actually have an even more important place as we move forward. Maybe, Jeff, you could give a little bit of your background.
Well, thank you, and it's an honor to be here with everybody. We are, I think, planning on having some Q&A at the end as well, so looking forward to that. I'm Jeff Sennett. I'm the president and CEO of Vantage Bank. First, let me say that I'm very passionate about technology. I'm very passionate about community banks, and that sometimes leads to me talking very quickly. So if somebody can just give me the slow down signal if I start to do that, I'd appreciate that. So I'm, as I mentioned, I'm the CEO of Vantage Bank. I did not come through the traditional community bank CEO channels. I started my career as a software engineer, working on the model banking program for Nations Bank. And that was the program where Nations Bank had acquired all these banks. They were bringing it together under one platform. And I worked on the platform systems. And I worked on something that was called home banking at the time. So I'd carry around a box of about 500 floppies. And if I got it out of order, I had to start over. Technology's come a long way. From there, I went to Barnett Bank. And when Barnett Bank, which was an incredible bank out of Florida, was sold to Nations Bank, I took that opportunity to go with some friends to start a software company. And during that time, I struck a relationship with a community bank, a community banker in Fort Worth, Summit Bank, Phil Norwood. And as we were growing that software company, I saw how important a community bank was to small businesses. Ultimately, that software company sold, and when that happened, Phil Norwood reached out to me and said, where are you going next? And I said, I think I might go to Bank of America. And he said, no. Come to community banks, and you can see how you can put together the technology you've been working on at a small software company with the community bank and really make an impact, just as we did, but we can turbocharge that with technology. And so I took him up on that. I became his CIO. That bank ultimately sold to Frost, and I've been in the community bank space ever since. I'm a huge believer in what technology and community bank can do, not only for the community bank itself, but for the customers, the prospects, the communities of community banks. Vantage Bank, the current iteration of Vantage is about 6 years old. We brought together a few banks and really set forward a path to set this bridge between traditional community banking and what we feel is modern community banking. We put that path in motion intentionally. And one of the first things we did was a risk assessment in terms of what are we going to face in the future. Vantage Bank is designed to be a multi-generational bank. We're 100% family and employee owned, and we really want to take a long game approach. And part of that risk assessment was around AI, was around stablecoin, tokenization, tokenized deposits. And so we set a path. We're a very decentralized bank as design. All of our employees are spread across the state. We have a digital backbone that connects us all. We spent a tremendous amount of time on data modeling and a tremendous amount of time preparing for this transformation that's occurring right now.
Thanks, Jeff, and obviously a very innovative approach to banking that you've taken over your career. Maybe you could spend a little bit of time talking about how community banks can offer their customers different types of products or different services than big banks, and how you feel like you're able to be competitive against them.
So community banks, all of us pride ourselves on really understanding what our customers are asking for. How do we structure solutions, products, and services in order to make an impact for them? we can be ultra responsive, and part of that responsiveness is data. But another part of that is really taking control of that innovation. We just heard in the last panel, depending on the big three. That's something that I think what we're going to talk a lot about today untethers us from. So for us, Advantage, we spent a lot of time putting a layer on top of our core provider in order to take more control of that, in order to provide differentiated services and products. That's worked out very well for Advantage. We were $1.6 billion 6 years ago. We're knocking on the door of $5 billion now. And so when you put together that accountability that you build with your customers, your thoughtfulness in terms of what your customers are trying to accomplish with ultra-responsive products and services that help them be competitive, community banks are a natural place where they're going to turn.
Yeah, it's a very impressive deposit growth, 25 or 30% probably annualized, trying to do the math quickly in my head, which is, obviously significantly faster than what the market's growing. And what do you think is primarily driving that growth? When you think about, is it the technology that you're being able to offer, the different ways in which you can differentiate yourself from banks where there might be a more homogeneous offering when they're large and they're big?
So our largest deposit growth year was the 9 months after Silicon Valley Bank failed. Our deposits grew over 33% that year. But I think that what that signal is it's a signal of when there's times of uncertainty, people turn to who they trust, who's committed to them. Our growth really started to explode right after COVID and PPP. We actually had rolled out a program ahead of the PPP program, and we modified a third of our customers' loans in 5 days using technology. What that turned into, though, was this sense of trust, and they became our biggest net promoters. They became evangelists of Vantage Bank and community banks. And we're facing that again. We're facing a time of uncertainty. This time it's not a pandemic. This time it's not a bank failure. This time it's a transformation of technology and uncertainty around technology with tokenization, stablecoins, tokenized deposits. And again, I think community banks are where your customers and prospects on Main Street are going to turn because we have that trust. They know that commitment. And so it's an opportunity to leverage that and to provide solutions to them in a way that we've never been able to do before. And I'll talk more about that in just a bit.
Obviously, things have changed in terms of the administration's willingness to enable stablecoins and blockchain technology into the financial services industry. And obviously, the Genius Act has also been a very important piece of legislation that is enabling stablecoins with legal certainty in a way that hasn't existed before. And certainly that's been something that you have experimented with. And I think when we were talking ahead of this conversation, I was really surprised and interested to hear in the ways that you're using both blockchain and stablecoins to change the products and services, the way in which your bank can offer your customers a new experience, and also how it can even change the cost curve. So both in a way of changing your revenues, but changing your expenses. And I think that would be really helpful for everyone to hear about. Absolutely.
And I know I have probably some of my regulators in this room, so this is all meant with absolute respect.
Very interesting caveat.
So Vantage, we have been methodically moving down this path, like I mentioned, for 6 years. And we've been pushing on the fences with some regulators during that time. And so one of the very first things Vantage did was we offered a Bitcoin savings plan. So our employees could put up to just 6%, up to 6% of their salary into Bitcoin. And eventually we had to shut that down. I still have employees point out to me all the time what that cost them when we had to shut that program down. 5 years ago, we started putting our loans on the blockchain. So when Vantage originates loans, we have a proprietary loan origination system that we built. We actually then originate them on our core system, and we send them to the blockchain. And that's positioning for a day of tokenization around those assets so that we can have a much more effective way to manage our balance sheet. It provides us accessibility into the biggest asset managers of the world, but also provides us a very easy way to sell and manage loans and participate and syndicate between banks. We can also sell any part of that asset to any of you or one of our customers. That's the power of tokenization. So that's another example of advantage positioning for this. In terms of stablecoin and tokenized deposits, Vantage started down this road really 2 years ago. We went to our regulators and we presented to them what we wanted to accomplish along this front. That was supposed to be a fairly short meeting. The very first question I got, and they may be in this room, was, why are you doing this? And you're a healthy, safe bank. And the answer was, we're not doing this to take on risk. We're doing this to manage risk. We know this is going to be an important part of the banking system in the future. It's going to be an important part of community banks. And it doesn't have to be Vantage. You pick any community bank and work closely with them along this path. And that meeting turned into a full day and then some follow-up meetings. And eventually our regulators, both on the state side and the Fed side, reached out and said, we do want to partner and we want to learn more. And you be completely transparent with us. You present your risk assessments and what you're trying to accomplish, and we'll work with you. And we've been meeting with our regulators every other week now for almost 2 years. And through that, we've been pushing forward on some proof of concepts with tokenized deposits and stablecoins. The first one we did was earlier this year. Vantage Bank, working with our partner Custodia, did the very first tokenized deposit U.S. bank release on a public blockchain. We since have pushed that proof of concept forward, and this gets to that differentiation where one of our customers is a trucking company, and we asked that trucking company, what's one of your biggest challenges? And this is where this technology should resonate with every community banker, because for the first time, we have an unbelievable opportunity to actually help our customers in a way we've never had before compete and win in their most crucial workflows or some of the most strategic challenges. So our trucking company said, one of my biggest challenges is the continuity of good drivers. I need the ability to know I can count on my best drivers. And I asked him, what would do that? What would help you have that? And he said, they all want to get paid when their route is complete. And so we said, okay, so when that truck drives into the warehouse, if we could recognize that and pay your truck driver, would that do that? Would that be that differentiator? And he said, that's a game changer. So our second proof of concept did exactly that. We paid when the truck went into the warehouse, and that's the kind of things that you can do with stablecoin, tokenized deposits, and the smart contracts, the programmability around that. So when you expand that to what community banks do, all of us want to understand how can we help our customers be successful. And we can do things on the credit structure side, and we can do some on liquidity management, but we've always been somewhat handcuffed in terms of what we can absolutely do to impact them. And now we can work outside of some of those handcuffs, some of our core providers, some of the other gatekeepers, and we can work directly in this technology and directly with our customers to understand how can we help them differentiate, how can we help them have a competitive advantage. And so now we're working on a proof of concept with a large commercial builder. That commercial builder wants to pay his most important subcontractors on that inspection flow at the construction desk. We'll be able to enable that. I will say that after that proof of concept with the trucking company, we got a call from a very large car manufacturer asking if there was an ability to do something like that with their chip supplier after it got QA'd. And of course, the answer is yes, you can do that on those type of events. Now, this large car manufacturer, Bank of America, Chase, they're going to listen to them. But all those companies on Main Street that are looking for that competitive advantage, that's where community banks can step in and really do something to impact them in very significant ways.
It's really interesting. A couple of things. When you think about the blockchain, the whole point is that it's decentralized and that it actually can allow there to be fragmentation, yet for there to be consistency in how things move, which is obviously potentially bringing everyone closer to the customer. And for people who are already close to the customer, like community banks, that can actually be a real advantage. And I know that you were maybe describing some examples where you have customers and they need to be able to operate, even though they're a local customer, they have the need to operate either cross-border or even across the country. And so you now have a way of being able to operate in a much wider geography while staying local. Were there maybe one or two examples that you could go into around even cross-border, because it's really very interesting?
Yes, I think it's a very important aspect of this as well. It opens up avenues and markets to community banks where, we may not have had access to in the past, but even if we did, there was a lot of middle parties involved that would make it less of the ability for us to do that at margins that made sense. But with the blockchain, with tokenized deposits and stablecoin, we have the ability to do that. So Advantage, we're setting up an ecosystem. Sandbox was mentioned earlier. We're going to release a sandbox later this month, and we're going to invite other community banks to participate in this as well. And we want other community banks to. That sandbox will enable to do some of these proof of concept pieces. But one of the things that Advantage is, about a third of our customers operate in the U.S. and outside of the U.S. One of the banks that we brought together was International Bank into Vantage. And so it's very important for us to be able to operate effectively, and safely, quickly, and with good margins across border. So the trucking company I mentioned earlier actually was a trucking company out of Mexico. And just to give you a little more insight into this technology and its capability, it's our thesis at Vantage that, in terms of tokenized deposits, and we can talk about a little bit about stablecoins, tokenized deposits, if that makes sense, but in terms of tokenized deposits, we're ready to do that today. We've shown that with the current oversight, all the rules around monitoring, AML, it falls under all customer dispute, all regulatory oversight. We can do that today. It's even more transparent than other payment rails. And a good example of that is when we did that proof of concept with the trucking company, our risk monitoring software flagged it when we kicked that transaction off. And it flagged it because the trucking company, the CFO, had moved one penny from his wallet to the Mexican CoinDesk exchange. And so our software stopped it. We reached out to the CFO and we said, our software has stopped this transaction because you've done an interaction with a party that has been on some questionable transactions. And he's like, well, hold on. He goes, I just moved one penny or 1 peso from my wallet to the Mexican CoinDesk just to make sure I could test it and it was live. But that's insight you would never have before. And so from a regulatory perspective, or from a bank perspective, you truly have true real-time traceability across these wallets like you never had before. So when we're talking to the regulators about these proof of concepts, they're asking us how we're monitoring it, our answer is, you can sit in on that. You can do it real time. So that tells you about, one, the use cases internationally. I'll also say that transaction, and this I think gets to your point as well, again, this was an international transaction, flipping between tokenized deposit and a stablecoin. It cost us 28 cents. And that's obviously a very significant difference than the model today, where you're bouncing across correspondent banks. It's taking a while for that to settle, and you're paying components of that transaction along the entire path with every one of those hops.
And what would the cost be instead of 28 cents? What do you think it would be for that same transaction using normal rails?
So using a normal rail for Vantage, let's say international wire, that typically costs us all in about $6.78. So significant difference between the two.
Yeah, I mean, that's an unbelievable difference in costs. Plus now you're able to unlock new revenue opportunities. And I think that's probably something that you could dig into in a whole number of different ways. But it occurs to me that because of the legislation that's happened, everyone is trying to think, well, what do we do with stablecoins? What's the strategy going to be? How does tokenized deposits happen? Obviously, large institutions have big budgets. They have big IT and engineering teams. They have the capacity to be able to fund these things. And when you're a smaller institution, it's just harder. And there's just a certain amount of capital you need to have. And that's a reality that every small company faces. When you think about how much do you want to be able to build internally, how much do you utilize external service providers, whether it could be Custodia or Paxos or someone, how do you think about how you can be able to make sure that you're able to offer the right type of technology and have it be competitive in a way that will unlock opportunities for you?
Great question, and I think this is a very important part of this technology itself. So all community banks, we all have to punch above our weight, but for the first time ever, we can work directly with each other, and we should, and work directly with partners like Paxos on the infrastructure side, and we should. And that's exactly what Vantage is doing. So we're working with key partners to build these solutions. We're inviting other community banks to participate in this, not only for capital reasons, but also for the margins itself. We have the ability to do this directly, which is very important. Probably for all community bankers out there, we do this all the time at Vantage. We ask ourselves when we fall short, we hold a retrospective and we understand why we fell short and how we fell short. Quite often, we fall short when we lose control of that experience. So when we're passing that experience off to a party that we don't have control over, quite often for us, that's the core provider, something isn't as good as we would want it to be. The customer experience, whether that's an employee customer or an outside customer, isn't as good. But now, for the first time, we have the ability to work directly with infrastructure companies such as Paxos, such as Custodia, such as Infinite, the ones that are actually carrying those rails directly in a relationship between them and between all of us without having to pay tribute or without having to lose control. And I think that is a model that should be extremely exciting to every community bank. It's extremely exciting to us.
Yeah, because it creates a direct-to-direct movement, whereas you might have to be going up and through different correspondent banks or other banks, and certainly, I think deposits are such an important element of how banking works, and there's a lot of questions around. Well, will deposits continue to have the same beta? Will they have the same duration? Could it shrink or will it increase? Like, how will stablecoins and tokenized deposits change those funding mechanisms? But one of the things that occurs to me is that when you have an asset, but you can go do things with it, you can move it, you can do other activities, you're actually more willing to hold it in some ways. And it seems like in your experience, that's what you've noticed. Maybe you could talk a little bit about how stablecoins and tokenized deposits are playing out and how you're thinking strategically for the bank and what are the opportunities for them and where maybe are they in opposition, if at all?
Yeah. So our thesis on this front is it is an opportunity for the golden era of community banking. And that goes right back to that impact you can have with your customers and in your community that we haven't been able to accomplish to the extent that we've wanted to in the past. So for us, one of the things we're doing at Vantage Bank is we're sending all of our employees through a design thinking methodology. And I don't know if anybody in here has ever been exposed to that methodology. But the reason we're doing that, it's about understanding problems, opportunities, and how to build a solution. And our thesis around that is that'll be a new treasury management, new treasury analyst role, where you'll be going out to your customers. You'll be learning about different industries. You'll be sitting down and understanding how can we help you be more competitive. What are the things around payments will help you? How can we actually be part of your core workflows? How can we implement agentic solutions, meaning we combine blockchain and AI in your core workflow into a competitive advantage for your company? When you do those things, you are not only putting yourself in a position you never had before, but you're creating true value and you're creating stickiness. And so for us, community banks are in those customers. We know how they operate. We know what their vision is. And when you can actually help them fulfill that vision, let them have those victories along the way, those deposits are not only going to stay, they're going to grow. So we see that we'll have our commercial customers, our consumer customers, will have their accounts at Vantage Bank. A percentage of those dollars will be held in tokenized deposits, and they'll be held in stablecoin. And the difference between the two will be kind of what they're trying to accomplish with those different money movements. So we think it's an incredible opportunity. And again, we just need to make sure that community banks understand that they have this opportunity to work directly with each other and do this in a way that we can impact our customers unlike we ever have before in the past.
Change can be hard. I know in our own company, trying to use AI more on an everyday basis is not easy to do. You're trying to build new habits, and you have current habits, and it allows you to be able to do things a certain way. If you had to give an example or a piece of advice of how a community bank could begin to use this technology or begin to experiment with it, what would that be? What would be the easy way to elucidate that for your peers?
Yeah, first thing I would say is bring in a cross-functional team that carries different perspectives to the table. Break it down into small bites. Partner with people that you trust around this world, around this ecosystem, and that's what we've done. That's extremely important, and educate. So at Vantage Bank, we've partnered with the Texas Bankers Association. We're doing education for both customers and bankers every other week. We're holding lunch and learns for customers and prospects in our community. And education is a huge part of that. And then as you start to get that education in place, put together a cross-functional team that's going to champion some proofs of concepts. And again, work with those partners that you trust. And we're happy to help you with that. But just take small steps. It's important to take small steps. I've been talking about this now for a few years, and for a long time, I didn't have much attention on these conversations. And now, like I mentioned, we're on calls with banks many times each week, and I think that's an important step forward. But there are so many use cases. There are so many possibilities and opportunities. Again, it's an exciting time, and I truly believe it has the potential of being a golden era for community banks.
And another way of thinking about a stablecoin is really it's a rail. It can be an account in certain cases, but it's also a rail that's 24/7, instantaneous, programmable, transparent, very cheap. As you were laying out, how it can significantly change cost curves. But of course, everything new also has advantages. It also has risks. Nothing is for free. You were laying out some ways in which compliance could actually be done programmatically, and that could potentially also change costs. But are there risks that you've come across that people should be aware of too?
Yeah, so as I mentioned, we always start with risk assessments and understanding the risk as much as we possibly can. And of course, we revisit that all the time. As I mentioned, tokenized deposits is really a modern rail following all of the oversight that the banking system has today. And so the risk around that are very similar to any other rail that you have in place. All the things you do with any other money movement, you do really the same things, maybe in a bit more modern way, a little less overhead. But when you move outside of that, and as these things continue to merge, there's several risks that we have our eye on. One is around smart contracts, the programmability of the blockchain itself. This will be interesting to see how it plays out. We're going to take a very methodical and bite-sized approach to that, but eventually there's a lot of power there. And where those smart contracts sit, we feel like they should be part of the blockchain protocol itself. There's other solutions that have those outside. We think that there's a lot of education, understanding, and potentially risk around that piece, but ultimately something we got to continue to advance forward. Counterparty risk is something that needs to also be considered. When you get to tokenized deposits within the banking system, the counterparty risk are banks. So that's obviously proven to be very, very safe. No deposit customers ever lost $1 in a U.S. bank. But when you move outside of that and you start working more globally, the counterparty risk, the understanding of potential depegging of that stable asset is something that we have to monitor. And of course, there's a lot of oversight that'll come with that after the Genius Act was passed. Beyond that, the monitoring piece of it, as well as the blockchain technologies themselves. There's going to be a lot of fragmentation around blockchain technologies themselves, both private networks, public networks. Some of them are going to be much larger than others. The technology itself being decentralized counts on having these large networks working in a decentralized manner. So I think it's very important that we pick the right blockchain protocols for this to be successful.
And there are ways in which you were describing earlier how you've experimented with blockchain technology aside from the movement of money, stablecoins or deposits, et cetera, but actually the movement of assets, potentially how you could tokenize different types of either loans or assets that your customers have. Maybe describe one or two examples of that.
So a really good example, and again, this I think is a good example to understand how this can expand the offerings that we have at community banks. So we started tokenizing assets several years ago, but about a year ago, we saw an opportunity to bring a lot of different fragmented origination systems from fintechs together into our origination system and then tokenize that onto our partner that we work with there is called Alpha Ledger. And what that accomplishes is it allows us to have access into all these different assets, alternative assets that we never had reach into before. But it also allows these fintechs to come in and have a bank participate in the underwriting of those assets, which is very important to the big asset managers. And then we've had these conversations with the largest asset managers in the world who never have had access to these high-yielding, fragmented alternate assets before, and now they're coming through a bank. Everybody gets the same information at the same time. It's all extremely efficient, very little overhead for us. So you have a fintech origination system automatically flow into our origination system, go through the bank's underwriting, get originated, and flow into the Alpha Ledger market. And now you have the biggest asset managers have access to this. And you can then extrapolate that in terms of what that does in terms of bringing accessibility to a lot of people that haven't had the opportunity to be in the banking ecosystem before. So it lowers those barriers and it provides avenues that we've never had before in ways that make sense for the first time. So that I think is a really good example of one, increasing the availability of both deposits and dollars to people that haven't participated in the system before, doing it at lower overhead, doing it at less cost, doing it at less risk, and bringing these things together in an efficient way that open up markets that were never open before.
Yeah, I mean, real-world assets are still quite a small percentage of on-chain assets. It's basically a rounding error. Most of it's either crypto assets or it's tokenized dollars, actually. And then after that, you're kind of still in very early stages. But as you get more and more dollars, I can really imagine you're going to end up in a place where having that settlement capacity can then create the operational benefits for other assets to come on. Certainly that's been our thesis over time. One of the important elements that was in the Genius Act and also has created some consternation is the capacity for yield to be passed on to distributors in the stablecoin bill. And that was part of the Genius Act. And I know there's been some concern of, well, is that going to actually end up creating competition for banks? Because right now they have a specialized position in how they're able to offer interest on deposits. What type of difficulties might that create because there's other ways to get yield? Or how much is that actually similar to, for instance, money market funds? There's $8 trillion of them. How do you look at the rewards-based distribution that Genius enables?
So, great question. There's, I think, a few different ways that this can be addressed, and we're not sure exactly what direction this will go at the moment. But there's a few things with that question. I think it's important to protect the moats of banking. So when we talk about a tokenized deposit, that's within the banking ecosystem. So interest can be paid. FDIC insurance is in play. It can be used as collateral. We can lend on it. And then you move more into the stablecoin side, and I do think that rewards are going to play a role on the stablecoin side. And there could be different participants in that. There could be rewards. Let me back up for a second. I think the main concern about where stablecoins are and rewards is because the stablecoin issuer is deciding where those deposit funds go. And so that concerns a lot of us in the community banking industry is if they're going to select just the largest banks, is that going to cause a deposit flight? So I think one way to address this is to provide ways to do rewards to FIs and have some fair participation amongst the network of banks that are participating around this. But there will also be rewards directly to customers themselves. I think those will take more of the play of loyalty points or those type of rewards. There's a lot of different ways to address this. But ultimately, we feel like as a financial institution where we expect to be carrying a certain part of our balance sheet in stablecoins, there should be a yield back to that, even if we weren't the issuer, but we're participating in that network.
That makes sense. Now, I know we're getting close to time, and we wanted to make sure that this could be a little interactive. So we're going to open it up here and see if there's any questions for Jeff, or even myself, I guess. We're happy to answer them and see if we can maybe answer 2 or 3 from the audience. Anybody interested? Any takers? Jackie. We can get her microphone. She's right over here.
Hi, I'll just stand up. I biggest stablecoin companies in the world. Like, how do you work with banks, and what kind of infrastructure do you have that could add value to people in this room?
Thanks, Jackie. So the question was, Paxos as an issuer of stablecoins, how do we work with institutions? And we're somewhat unique. We are neutral infrastructure. So we don't issue our own stablecoins. We issue them on behalf of other institutions. So for instance, we issue the PayPal stablecoin, which is the ticker symbol is PYUSD. It's about $2.4 billion now. And we've been issuing it for the last several years. And we don't do it for ourselves. We also issue something called the Global Dollar, and we issue that on behalf of the Global Dollar Network, which is actually almost 90 institutions. And there's several hundred more that are looking to join, and anybody can join it, and everyone can participate. And so our view is that we're going to be the infrastructure that enables firms to go out and issue stablecoins. I think ultimately there's probably only 2 to 5 really big stablecoins that can act as a rail. But there's going to be thousands of probably stablecoins, and they can be issued by institutions. We see that today, PayPal being an example, but lots of small institutions now are issuing stablecoins for their particular communities and their particular user base. You see that for different chains. You see it for different applications. You see it for different traditional institutions as well. And I think one of the biggest things that shifted is the Genius Act and the administration have made it possible for there to be like a real experimentation phase. But because they're all working through blockchain technology, while you're getting a lot of experimentation, it is actually keeping a way of having a consistent interoperability, which I think is important. You don't want to have fragmentation without interoperability. Fragmentation with interoperability actually can be very healthy because it allows experimentation and it allows competition to happen. And it certainly you'll have large institutions, and I'm sure some of the large banks will issue stablecoins, and we've seen that, but we've also seen quite a few smaller institutions do it as well. And that's the exciting moment that we're at. And Paxos as infrastructure provider is here to make that possible so that it's not something that someone has to go build and manage themselves entirely, because that can be quite an investment to make and a lot of time and learnings, which we've been able to do. We've been issuing stablecoins now for over 7 years. So we've been doing it quite a while. We do it through a New York trust. We're converting it into an OCC trust. So we're regulated just like a bank as the infrastructure provider, which is also unique. Thanks, Jackie.
Kim DeVore from Jonah Bank of Wyoming, and I have a question for Jeff. So when you speak about the infrastructure for community banks to put in place in order to operate on these rails, is there a de minimis level of volume that you need to be able to have in your portfolio before you actually recognize the savings from $6.78 to a 78-cent level? That if you're not a $5 billion institution and maybe you're a $570 million institution, how do you make that happen?
Great question. So I mentioned Vantage Bank is working to provide this infrastructure to other community banks. And we're doing that in a way that would be accretive with very low volumes, because we know that we have to lower those barriers for community banks. And so we have a model. We can walk you through exactly what that looks like. We believe that this will compound quite a bit over time, so we're willing to provide that model for community banks to grow over the next 5-7 years amongst that. Our model assumes that a $500 million bank with just 10% of their transactions that are on wires today go through in a year, it'll be accretive for you. So, so we'll be happy to walk through that on a call, but we know that those barriers need to be low in order to get adoption and for community banks to work directly together, and we don't want to miss that opportunity.
Great. Right here. Sorry, right here. Thank you.
Hi, Congressman Foster. I'm the lead Dem on the Financial Institutions Committee in the House. One of the big challenges that everyone faces here is identity fraud and KYC and that whole nexus of things. And other countries are moving very rapidly towards having the ability to prove you are who you say you are in an online transaction by basically getting out their cell phone, doing the biometric login, and presenting what would be in the U.S. a real ID, real ID digital driver's license. And I think now the EU is going to have that by the end of the year. England just announced they're going to have it. It's been in place in Asia for a long time. And so this really avoids all kinds of things and potentially lowers the compliance cost for this. I was wondering where you see, is that something we should really make a push? I was just, when the Biden administration, of course, promised initially that they were going to make progress and they didn't do anything. Do you have any thoughts on that and how that could really make life easier for just automated KYC?
Well, look, I think one of the exciting things about being on chain is that it's transparent. So you're able to see how things are moving, and you can use a variety of on-chain analytical tools to be able to monitor transactions, to be able to freeze transactions, to seize transactions, and to build compliance tools that operate in an automated way that can actually lower your costs on a per transaction basis, as Jeff was describing. And there's different ways to be able to do that, including adding identity in as, say, an attachment to a transaction as it moves. There's different industry standards around being a VASP, virtual asset service provider, that require you to be able to understand where funds came from and where they're going to. And so I think there are a lot of these in place. They're not maybe quite as prescriptive as in other jurisdictions, but it's something that we expect and very much have like the frameworks for that, but they are evolving.
Yeah, I'll just add to that. So I mentioned earlier that we feel like tokenized deposits can get out the door very, very soon. We'd like to get out the door now. But that's between banks within the banking ecosystem where KYC, all that is actually already occurred, and it's actually occurring on the transaction itself on the blockchain. When you move over to stablecoin, you're moving more into some non-bank areas and non-bank customers. There absolutely would like to see the U.S. move that direction. At Vantage Bank, we're using technology similar to that, like with Intersect, in order to do those kind of things. Again, we have about 1/3 of our transactions internationally. So we would like the U.S. to have a standard component on that. Again, as mentioned, the blockchain allows us to do that in a way much more effective, much more efficient than we've ever had the opportunity to do before.
Question in the back.
Yeah. Hi, how are you? Carlos Garcia from Nave Bank in Puerto Rico. One question for you. What are your thoughts in terms of using FedNow as a payment rail for small businesses?
So we were a FedNow beta bank. We've had some challenges with adoption there. Again, I mean this with all respect, but our feeling is tokenized deposits is a better solution. It's 24/7. You're really just transferring the liability between two banks on the behalf of a customer. And so, our energy and efforts are really focused on the tokenized deposit side for us. We do offer FedNow. We just haven't been able to get much adoption there. Again, we feel like tokenized deposits will be a more effective rail, and then you can add the programmability to that, and that's what will start to compound over time.
Great. I think we might have time for one more question.
We had a question in the front.
Great.
Hi, Jeff, you mentioned rewards on stablecoin, and whether that's between providers and even rewards that would ultimately go to customers. And you also mentioned as a community bank CEO, the concern about deposit flight, maybe deposits leaking from community banks to the large banks. And I have the same concern about that. But when does a reward become interest, and which obviously is barred by this Genius Act? And how do you navigate that, between just deposit flight for community banks and rewards, interest, that whole spectrum?
Yeah, there needs to be much more work around rewards when it comes to stablecoins. Again, tokenized deposits can pay interest just as a deposit. And I think there's a variety of ways to address it. The way that I was speaking towards was, there being a consortium of participants, FIs, within the stablecoin participants. and their ability to get a reward that could be passed on to their direct customers is one way to address that. I think that is an important way that protects banks and also allows customers to participate in a reward program. You're effectively paying interest from that bank because the interest is first being paid to that institution. Yeah, that's personally the way I would like to see the oversight go, but there still needs to be a lot of work there. Other ways of doing it, of course, is just more on the loyalty point side. Things can get a bit blurry there in terms of is that really an interest payment versus a reward. I think that's an area there's going to have to be a lot of focus and oversight. Again, where I lean always is go back through the financial institutions and allow them to participate with the stablecoin providers and do that in a way that's based off of the volumes. And again, I feel like community banks can protect those volumes because of the relationships we have with those customers and the impact we can make working with those customers within their core workflows of their business themselves.
All right. I know there's no doubt an endless number of questions, and we could spend all day talking about this. It's so fascinating. But our time is up. And so, Jeff, it was really great to spend some time with you. Thank you so much.
Thank you.
And thanks to the audience. Yeah.